Thanks for being with us today. I'm happy to be back. Looks like we have a real nice turnout. Today, I wanted to talk about day trading. The current environment in the market is really one that is offering up just numerous day trading opportunities. Whenever you get increased volatility, like we've seen for the past couple of months, it really is a great time. If you have time in front of your screen to log on and look for those intraday opportunities. And I mean, there's so many these days, and I'm excited to be here and share a few of those with you. So please do remember that trading can be risky. Do not trade with real money until you're completely comfortable with the system that you are using. As Renee said, I am Vince Vora. I am the head trader here at Trading Wins, and I have been doing this for a little over 30 years. We've designed a number of systems, and I'm going to share one of those with you today. So in today's presentation, I'm going to start off by talking a little bit about the challenges of day trading. It can be challenging, especially at the beginning, but certainly something that can be extremely profitable and extremely fulfilling, because it doesn't take a lot of time once you do understand exactly what you need to do, and it's certainly something that you can use to make a living off of. Now, I'm going to also talk about 4 of the key items that I think you absolutely need to do to have success as a day trader. And then I'm going to bring up my charts and start walking you through the strategy that I'm going to share with you today. We're going to build the layout together. We're going to look at several examples. Be happy for you to throw out a few symbols when we're at that point, and we can look at the charts together. And then hopefully, if we have time, we will answer as many of your questions as possible. So let's talk about the challenges of day trading. And I would be interested to know how many of you are actually day trading right now. You know, day trading certainly can feel like a challenge and can feel like this if you're not quite sure what to do, or if you're day trading at the wrong time or in the wrong market environment. Whenever you have a low volatility type environment, it is obviously going to be a little more difficult. Times like this, where there's a lot more movement, that's a lot more what you're looking for when you're day trading. That's really what it comes down to, is movement. So as we go through here, I'm not only going to share a strategy with you and the technical setup you want to look for on a chart, but also talk a bit about the types of stocks, or how you would find the stocks to trade in this environment. I see George is trading now. That's fantastic. Tons of opportunity out there. Please don't be shy. If you've tried this and failed before, nothing to be embarrassed about. Almost everybody fails at least their first time around, because day trading can be a lot different than swing trading, and certainly very different than investing. But as I mentioned, tons of opportunity. So let's talk about the 4 keys to day trading success, what you absolutely need to master. First one is discipline. And this is a challenge for many traders, but most of all, those of you who might just be starting out. And really what this is about is building the right habits to allow yourself to be successful. What you need to do as a trader is find a pattern that consistently repeats itself and then execute on it. In other words, follow your plan. You're going to have a strategy, a trading plan, along with your money management plan. And if you just follow it like clockwork, it'll be fine. And I'm sure you've heard many times how you need to try to trade like a robot, remove your emotions. Here's the thing: is as humans, that's extremely difficult to do. But the way you control that is by laying out a plan. Actually write it out. Make yourself checklists. Okay, you want a checklist for the items that you need to see before you enter a trade. You're going to have a checklist of the things you're going to do while you're in that trade, and you're going to have a checklist for the things you're looking for to exit that trade. And as long as you're able to check off each of those boxes, then you're avoiding bringing in your emotions, and you're following your plan, which is what's going to lead to success. Focus is another thing that's extremely, extremely important when you're day trading. Generally, day trading, the reason why it's challenging is because things happen a lot quicker. I mean, if you're trading on a daily chart, you have the luxury of looking at that chart after market close, taking all the time in the world to analyze that chart and, you know, what happened that day, what you think is going to happen next. When you're day trading, and especially if you're using the lower time frames, like a 1 minute, a 5 minute chart, you have to make decisions on the fly. Things happen very, very quickly. So if you're distracted in any way, that's when mistakes will happen. First of all, if you're feeling a little off that day, maybe under the weather, do not trade, and turn off all other distractions. CNBC, radio, you name it, anything like that, turn it off. The only thing you need to focus on when you're day trading, excuse me, is your chart, okay? And I'll show you exactly why in just a moment. Secondly, most people, when they think of day trading, will associate it with risk. Again, it's only risky if you don't know what you're doing. The reason why it's usually risky is most people day trade for profit. In other words, that's where their focus is. That's all they're thinking about is how much money am I going to make on this trade. The way you consistently win at this is to do the opposite, is to minimize your risk. Always think of risk first and do everything you can to minimize it. In a moment, when I show you the strategy, you're going to see just how risk averse it is. Not only are we going to be stacking the odds in our favor when it's time to take a trade, but with the way you're going to manage that order, you have very minimal risk without capping your upside, okay? And lastly, the fourth key here is to think strategically. And what I mean by this is that you need to have your plan set in place beforehand. In other words, you know exactly what you're going to trade before you find that trade. You know exactly how you're going to handle that trade once you're in it. And you know exactly where you're going to get out, or at least at a minimum, what exit strategy you are going to use before you ever place that trade. If you have all that set in place beforehand, then there are no reasons to bring your emotions in. Nothing will affect you. All you're doing is following the steps you have laid out in your plan. That is how you become successful. And tracking your trades is extremely important, because what you measure can be improved. That's the only way you're going to identify what you're doing right and what you're doing wrong and make those adjustments. Okay, so if you're just starting out, it's always a good idea, as I mentioned at the beginning, to not use real money at the beginning. Use a paper money account, work out the kinks in your plan, and then get started with small amounts, and then move it up from there. The easiest thing to do in trading is to scale your account. In other words, once you have a plan that you're confident that will work for you, and you know that you yourself are able to follow that plan, scaling it is a no-brainer. Whether you're trading 100 shares or 1,000 is going to be no difference whatsoever. Whether you're trading one option contract or 10 or 100 makes no difference whatsoever. But consistency is everything. And the only way you do that is to have that plan in place and focus on following it. Okay, build those habits. It'll really pay off. That's the only way you're really going to become a specialist at this. Now, how do you prepare for your day as a day trader, and what should you trade? Well, there's a couple things that you should do to identify the proper candidates. There's some stocks that you will always have on your list because they just generally move no matter what, and they will give you opportunities. But otherwise, if you look at the pre-market session, okay, the hour before the market opens is really the most active. And what you want to do is just try to get up to speed with the news of the day and look at the futures contracts to get a feel for where the market is opening. Is it opening up higher, lower? Is it going to be a very bullish day, a very bearish day? That sort of thing, just to get a feel for it, and find some stocks that are in the news. And it could be anything. You don't have to look for negative news stories or super bullish stories. All you want to do is identify something that may be moving more than usual. So for example, if a company reported earnings after the close yesterday and they're actively being traded in the pre-market session, well, then you know they're going to be active throughout the day. And whether they move up or down, you really shouldn't care about that, because the chart is going to tell you where to get in and where to get out, on either side. And some of the things you can do to get up to speed with what's happening in the markets and what the major stories are is to read some of the major publications like the Investors Business Daily, like the Wall Street Journal, keeping an eye on CNBC or Bloomberg before market opens. Once it opens, shut them off and focus strictly on your charts. You can also look at some websites like investing.com or bar chart, that sort of thing, just to get a feel for what's out there. You can also do the same after hours. Major news stories, like I mentioned, earnings or anything else that may set up a stock to be day traded the following day. Okay, so let's get started. Let me bring up my charts here and walk you through the setup. Now, I'm all yes. This system that I'm about to share with you will work on anything, whether it's equities, futures, Forex. You can trade it with options, any time frame really, but it is geared towards 1 hour or less. Okay. Now, one thing you can do no matter what time frame you're trading or what system you are using is to focus on stocks that are trending strongly in one direction or another. In other words, you want very clean, very predictable charts. That is one way to really put the odds in your favor. For whatever reason, ABMD here has been trending higher all year, and we don't really need to know why. All we need to know is that clearly the bulls are in control here, and that's really all that matters. It's just a nice steady trend, because when it comes to technical analysis, things tend to repeat themselves. And so all year long here, you'd be looking for trades to the upside, and they would be very easy and very predictable. Okay, if you're trading a stock sort of like BMRN here, that's all over the place, that's going to make it a lot more difficult on yourself. Yes, once we add on all our indicators, the strategy may find some entry points, but the likelihood of you getting stopped out on something like this is much, much higher than something like ABMD or, say, a Boeing that's been trending nicely all year, that sort of thing. So stick with the nice trending charts. Now, I'm going to start off with the chart of the SPYs here, and I'm going to start laying out the indicators one by one. So first of all, and actually, let's build this fairly quickly. The first indicator that we want is a simple period moving average, okay? And I always use the 20 period simple moving average. The reason for it is we use it for momentum, okay? Let me just thicken this up a little, change the color, and add it on. So what the 20 period moving average does, first of all, it's one of the most widely used moving averages, which is one of the main reasons why we use it. But you can measure momentum on a stock one of two ways. The first way is to measure the slope on the actual price bars, right? If you take your trend line and draw a line over the bars, you get an idea for whether it's sloping higher or lower or just kind of going sideways. Well, the 20 period moving average does a decent job of drawing in the same type of slope. But the real advantage comes when you get a pullback, such as this, or such as over here, sideways consolidation or a slight pullback. When you see that, if the moving average barely moves at all, then that helps you understand that this is merely a short-term retracement before a continuation of the trend, okay? And the sharper that slope on the 20, the better, okay? So that's the first one that we're going to use here. Secondly, we're going to add on what is known as the Ichimoku Kinko Hyo indicator. We like to call it, or it's otherwise known in the industry as the cloud indicator. Now, there are many portions to this. If I just add on the indicator as is, you'll see that there are a number of lines here along with these shaded areas, okay? The yellow and the pink shaded area, which is what we call the cloud. What we want is we want to remove all the lines except for the cloud, okay? So the Tenkin, we're going to uncheck, Kijin, uncheck, and the Chiku uncheck. Now this is the Thinkorswim platform, but you can do the same on any other platform. The actual settings for the Ichimoku indicator are the default settings, 9 and 26. We're not going to touch those. We're going to leave those as is. But this way, all we have is the cloud portion, which we're going to use for trend. Okay, so you want to do two things quickly when you bring up a chart. You want to identify whether there's trend and if there's momentum on it. Because when you trade with trend and momentum together, more than half the battle is won before you ever take the trade. So when you normally you're looking at the far right of the chart here, okay? Right now, you can see that price is below, but the moving average is above the cloud. So in this case, we don't have a clear trend in place, okay? The way we judge whether we have a clear trend or not is if both price and the moving average are above the cloud, that's an uptrend, okay? And then momentum is the slope on the 20. If it's sloping upward, that supports the move. If both price and the moving average happen to be below the cloud, that would be a downtrend. And then in that case, we'd like to see a downward slope on that 20. So whenever you bring up a chart here and you look at the far right, in a split second, you know whether or not there is a trend and whether or not there's momentum behind that move, okay? That is absolutely key. And now we're going to add a couple more indicators down below. The first one being the CCI indicator, the Commodity Channel Index. Now this one, we are definitely going to change the setting. The defaulted setting is 14. We want a much more responsive CCI. We're going to lower that to 5, okay? So 5 period CCI. Now, normally, this comes with lines drawn at the plus 100 and the minus 100 levels to identify overbought and oversold conditions. Again, we're going to get rid of, excuse me, rid of those lines. And all we're going to do is leave the line drawn down the middle at the 0 level, okay? We want a line down the middle. So what we have now is, and let me just change the color of that for a second. I think it'll be a little brighter. There we go. And actually, I'm going to thicken it up a little. Let me know if you can see it clearly on your screens, okay? Let's try that. Okay, so now we have a 5 period CCI with a line drawn down the middle. And don't worry, in a second, I'm going to explain all the entry rules, both for long, short trades, exits, everything, okay? We're going to add one more indicator here. The CCI here and the next indicator, which is going to be the MACD histogram, those are the two we're going to use to find our entry points. Now, the MACD, normally, the default settings are 12, 26, and 9. What we're going to use is 4. We're going to put the second one all the way down to 5. So 4, 5, and 13. So you should write these down. So we have a 20 period simple moving average. Okay, we have a CCI with a 5 period and a line drawn down the middle at the 0 level. We have the Ichimoku cloud with the default settings. And we have a MACD with the settings 4, 5, and 13. Okay, so let me thicken this up a little. There we go. And there it is. Okay. So now, lastly, we're going to use one to help us with exits, but I'm not going to put that on just yet. Okay. I am going to first walk you through the entry rules for the long trades and then the short trades, and then we'll introduce the exits. Okay. Now, as I mentioned, you want to be trading with, at most a 1 hour chart, usually something even tighter, a 15-minute, a 5-minute, 3-minute, 1 minute, whatever you prefer to trade. The 1 hour to me, with stocks trading over $100 a share, just present, excuse me, fantastic opportunities. And I'll explain why in a second. If you're an options trader, you're really going to love this. But let's look at the criteria. Remember what I said before. What you're looking for are those areas where price and the moving average are clearly either above or below the cloud. And in this case, we're looking for a long trade, so we want it to be above the cloud. So that would happen here. Now, second thing you want is momentum. You want slope on that 20, which we have here, right? So the next time you get some kind of pullback, like we see here, what you want to identify once you're here is the very next bar where both the CCI and the MACD turn positive. In other words, if they were below zero line first and now we're above, that's what we mean by turning positive. Here, below that zero line, in other words, in the red, and then turning green, that's what we want. Now, they don't have to happen at the same time. What we want to identify is the bar, the first bar where both are above zero, because we may have a couple of bars where one is above zero but not the other. Okay, so the first bar when we're above zero is right in here. Let me zoom into this area so we can see it a little clearer. Right in here. There's my crosshairs. Let me highlight this little candle right in here. So this is the first one where we went from below zero to above on the MACD, and the CCI was already well above zero. Okay, we still have slope on the 20. We're above the cloud. That's a high percentage play to the upside because we have trend, we have momentum in place, and we're stacking the odds in our favor with the other indicators. Once you identify that setup bar, you mark the high, and if you get a trade 1 tick or 1 penny above the high, you go long, and your stop goes just below the most recent low right here. So this is what I was talking about earlier. Very, very small amount of risk for, a much bigger reward. Okay. Now we'll talk about exits in a second here, but that is the entry criteria for longs. Okay. When it pulls back again, if you still have slope on that 20, you still have the same conditions. You're above the cloud, all of that, but your CCI and your MACD have turned negative, have gone below zero. Again, you identify the one bar, the very first bar where both are above zero. Okay, right in here, you mark that high, and then you go from there. If that high breaks, you go long, stop goes just below the most recent low. And you can decide which trades you take and which trades you don't. So in other words, if your entry, excuse me, was up here and the most recent low was down here, right? So here to here carries much more risk than this one, for example, than here to here. And you'll find some that are much tighter. What you want are the ones with the smallest amount of risk and the most significant slope on that 20. So the more slope there is on the 20, the better. And the smaller the risk, the better. All right. In the long run, what you'll find is you'll have a lot more winning trades, but the real key is that your winners are going to be much bigger than your losers. That's what really works in your favor. Okay. Now, let me quickly zoom out here and let's zoom into this area. Now, when you see a cross here, we move below. So when price and the moving average are below the cloud, that is a downtrend. When you have a slope lower, that's momentum in that direction, right? So here, price moved below, came back to retest the cloud, right? On that retest, it failed. At that point, we had all the conditions we wanted. Slope on the 20 to the downside, price below the cloud, same with the 20. And right in here, this little red candle right in here, let me highlight it. That's our setup candle. Right in here. Oops, let me try this again for some reason. Let me try to zoom in here and try this. Maybe you can see it better. There you go. So if you look at my crosshairs and you look at the bottom, the first red candle here on the MACD and the CCI was already below zero. So that is our setup candle. You mark the low, and on the trade below it, you go short, okay? Your stop goes just above the most recent high. See how tight that is? And off we go. When it pulls back up, okay, you may get stopped out at this point and bank a profit, but as soon as the next bar again goes negative with MACD and CCI, which is right in here, you mark that low, and again, if you get that trade, you go short and stop goes above the most recent high, and you take your next opportunity. It is very, very simple, very easy, very consistent, okay? And again, you can use it on any time frame that you're comfortable with. Look, not to show you, I'm not cherry picking. I'm just going to open the Dow 30 stocks, okay? And we're just going to start going through a bunch of these. So remember, what do you do when you first bring up a chart? You look to the far right. What's happening here? Do we have a trend? In other words, this price and the moving average below the cloud at this point? Yes, it is. So that's a downtrend, right? But do we have momentum? No, we don't in this case, right? Moving average is flat. So we move on to the next one, okay? But if you look back and whether or not the strategy works, have a look at here when price moved below the cloud, same with moving average, with a nice slope. We got that pullback, and we just patiently wait for that first candle that crosses from positive to negative, right in here, right? Mark that low on it, and if it goes, when we get a trade below it, go short, and the stop goes just above the most recent high, and off it goes. We can look back, right? Same thing here. Let me just zoom out so we can see this a little better, okay? All through here. Now, if the moving average goes flat because the pullback goes too far and the moving average flattens out, you don't need to take those. Most often they'll work anyway, but you don't need to take those, okay? Just like in here, when totally flat, you don't need to take those. You can wait until the moving average is sloping, okay? Because there's going to be so many opportunities with this, okay? Let me flip through some of the stocks here. Here's McDonald's. Throughout this whole area where it was trending strongly lower, and this is what you want. This is why you want to look at the futures market ahead of time. You want to look for stocks in the news, something that's going to make them move. The beauty of this is that when they're just sort of trending sideways and not doing much, the criteria will not line up. Okay, so it'll keep you out of that chop zone. If by chance, every once in a while, a trade will trigger in like that, you'll get out very, very quickly. In other words, your stop will be very tight anyway. But when you have a flat moving average, there is no reason to take that trade. In here, with this type of slope, that's exactly what you want to see, right? The other thing is that when price crosses from one side of the cloud to the other, and there's a slope already on the moving average, that's a heads up of a bigger move coming in that direction. It happens both ways, just like it did back here to the right, okay? And then you, and look, if it happens where that big move doesn't work out, you'll never end up getting a trade setup because the criteria won't all line up, okay? So it's extremely consistent and extremely helpful. Look at Home Depot. All throughout here, if I zoom in, there were trade setups on every one of these pullbacks, right? Pull back here, and you'll get a setup here, all along the way, back in here, right? First bar that turns green, right in here, and off you go. So, and now, let me tell you why I liked the hourly time frame with stocks over $100 a share. first of all, when these stocks move, they really move. We're not talking about small moves. I mean, look at here to the right, this trade in here. Let me zoom in. First of all, we had price coming through and that moving average coming through the cloud with slope. So we knew there was a bigger move coming, okay? We got a nice orderly 4-bar pullback here. And then we got a real nice setup to the downside right in here. Okay? Now, this at the time was about a $200 stock, right? $200 price point. Well, that drop took it all the way down to like 175. That's a $25 move. Now, no one says you're going to catch the absolute bottom, but even if we get out somewhere around in here, you're still talking about a 12, 15, maybe $20 move. Okay? So, since we're only going to be in this a day and a half, 2 days, maybe 3 days sometimes, like this, you don't need to trade options that are 3 months out or 6 months out. You can trade weekly options, meaning the options are extremely inexpensive. Yet, when you get a 12, 15, 20 point move on them, it's incredible how many times you multiply your money that way, okay? And it even on the lower time frames. So if you like to trade a 5-minute, for example, okay? Look at a move like this from here, which was a setup right in here, okay? So this was the what? About a 174, 175 level, right? Even just coming back up to here, okay? You make 2 points, not a problem, very quickly in what? In half hour, 2 points, right? So buying an inexpensive weekly option, you know, the bigger the move, obviously, the more money you make. But I've been doing this a while with the 1 hour, and it works extremely well, extremely well. Okay. Does anybody have any symbols they want to throw out? I have about 10 minutes left here. We can look at some examples if anyone wants to throw out a symbol. I'll keep flipping through the Dow components here, so you can see here. We can look at other opportunities. We can go back to the SPYs. How many of you trade the SPYs on the lower time frames? Right. This is the 1 hour. They've just been performing extremely well. Here's the 5-minute with some real nice opportunities. Right, since last week. We can look at the 1 minute. Okay, and see all this chop. Right, it's very rare that anything is going to line up. For you to have all the criteria matching up in here, very rare. And if you do, it's a small loss. But during drops like this, have a look at these moves on the SPY and how clean they are. Nice pullbacks. There's that downward slope, entry, entry, here an entry, here an entry. Works really well. Ed is asking for Facebook. Facebook's been very active, right? Let's look at Facebook. Run through here. Now I have a 1 minute on here, but again, this is a trade you do not want to take, right? Look at momentum. Not only is it flat, it's actually negative. It's going the wrong way. You want to wait for the high percentage play, like right in here, okay? And to get that move. But let's look at the hourly. Look at this, right? All this week. Look at this move from here. So your entry was right in here, right in this low. So what is that? Around 165, right? Got down to 149, but even if you exited, you know, what was it? 160, 165, 155, a 10-point move. Go back and look at the options. You'll see exactly what I'm talking about. Okay. Now, the one thing I haven't done yet is showing you the indicator to exit. Okay. So let's go back here. Let's leave Facebook on, and we are going to add. Now, you can use one of two things. Recently, I've really come to like the ATR trailing stop that they have here in Thinkorswim. If you're using a different platform and they don't have this indicator, you can use the parabolic SAR. I'll give you the settings for both, okay? So the ATR trailing stop here has an ATR factor of 5 and an ATR period of 5 and an ATR factor of 3.5. We're going to move that to 2.0. So what you want is a period, ATR period of 5 and an ATR factor of 2.0. That's what you want. And you'll see that it keeps you in these trades very, very nicely, okay? And gets you out fairly tightly, okay? So we can go back. Let's look at the SPYs. Brad was asking about the SPYs. Let me see what question he had. Yeah, he says SPY usually does well in April. Are you expecting that this year? Yeah, actually, Brad, before the year ended last year, in December, around the holidays, I told all my members that I really thought 2018 was going to be a very active year for trading. And it has been right out of the gate. And I don't think this volatility that we're seeing is going to slow down at all. So I think the SPYs are going to be a great opportunity in April. Here, these dots are the trailing stop. So when you look at getting in here, it's very simple. All you have to do is wait for price to cross below that dot. And when it does, the dot appears above the candle, okay? But you can use this to just actually enter your trailing stop order at the level of these dots, but it follows it very nicely. Here's that trade we highlighted earlier, okay? And it keeps you in until things start going against you, all right? But in most cases, it follows it very tightly and it keeps you in for the bulk of that trade. You can play with the settings yourself, but 5 and 2.0 have worked really well for me. The other thing is, if you don't have access to this indicator and you are going to use the parabolic SAR, which works exactly the same way, okay? These are the settings you want to use. 0.02 and 0.2. So an acceleration factor of 0.02 and an acceleration limit of 0.2. Many charting platforms have 0.08 and 0.9, okay? So use these, you'll find that it works much, much better. All right, so we covered quite a bit. Now, are there ways to make this better? Michael says he loves the parabolic SCR. Yeah, it really helps you stay disciplined, right? It really helps you take sort of your emotions out of it and just wait for that price to cross those dots. It really works well. What I wanted to get to is, if you go to tradingwins.com/March, that'll take you to this page. We've put together a training program for you. And where in this program, what we do is, what's the word I'm looking for? We expand, that's what I wanted to say, on those 4 specific keys to day trading success. We go into them in a lot more detail. I'm also, during this class, going to teach you how to easily calculate the perfect risk-reward ratios that you should be looking for. You shouldn't be taking every trade that sets up, and you only want to focus on the ones that are, really put the odds in your favor, not just from a technical setup perspective, but also from a risk-reward perspective. So you want the smallest amount of risk with, the largest amount of reward. I'm going to show you exactly how to quickly calculate that. I'm also going to share my watch list for you and talk a bit more about, how you should go about finding the ideal stocks to trade. Then we're going to talk about the best time frames to use, and more importantly, using multiple time frames at the same time, okay? And show you some techniques of how to trade this with options. Because with options, not only do you limit your risk, but you can really leverage the amount of profit you make, okay? tradingwins.com/March. All of this for just $3. Now, obviously, this isn't a moneymaker for us, and there's a lot more content in here than $3 worth. What we want to do is give you an opportunity to see what we do here at Trading Wins. We think you'll like it, and I wanted to give you something to sort of help you out right now, because trading right now, there's so much opportunity day trading right now, and I want you to sort of get up to speed as quickly as possible and be able to take advantage of this while it lasts, okay? I think it's going to carry on for a while. but I think this is something that will really help you. The link is tradingwins.com/March, okay, the month. And Michael, no, that's not this Saturday's class. This training that you'll receive is an on-demand trading. It's a recorded session you'll receive immediately after we process your order here. You'll be able to watch it as many times as you like to make sure you get this down pat, okay? TJ, yes, it's a one-time charge of $3. The renewals, actually, I should check with my staff. Normally we do a renewal for the monthly subscription. I don't think that's attached to this, but if it is, once you click on the button here, it will let you know if there is a renewal for the pro membership. Just to give you a bit more detail, our pro membership it consists of nightly videos from myself, 5 times a week, every Sunday to Thursday night, recapping what happened in the markets that day, and that's also where I share my trade ideas. We also have live market chats where we get together with our members twice a week. You get to come into our room, ask me any trading related question you like, and we also have a course of the month for them once a month at no extra charge. So that's all part of it. The auto renewal, if it is there, you will receive all of that for the next 30 days at no cost, and then from that point it would renew. But you don't have to; it's not mandatory. You can certainly give us a call and put a stop to that before it renews. But I really hope you enjoy it for the next 30 days, and I really hope you watch this recording a couple of times over at least. Remember, practice this on a paper money account first. Get comfortable with it, and then put it into the live environment with a small amount, because to scale your trading is the easiest thing you can do, okay? So I believe I am just about out of time. If there are any other questions at all, let me give you an email address. Let me just go back to the slide presentation here. There it is. If you think of any questions at all after we sign off, you can always email us at info@tradingwins.com.